which economies are currently growing at the fastest rate, which economies are currently experiencing higher and or lower productivity, and which economies are likely going to get richer versus poorer in the future. We'll be discussing these themes with our next guest, Joeri Schasfoort. He is the host of Money and Macro, a great YouTube channel focusing on all economies around the world. I encourage you to check it out. Link down below. Yuri is also a PhD, and he is very well versed in money and macro. Welcome to the show, Yuri. Welcome. Thank you for being here.
Thank you so much, David. It's a pleasure.
Like your channel, people should follow you there. Where can we learn about you besides your channel, and what can you tell us about yourself before we get started with the topics?
Right. So, yeah, actually, the channel is the main place to learn about me, but yeah, a little bit about myself. So, I'm an academic economist by training. I did my PhD at the University of Groningen in the Netherlands, then went on to do a postdoc at the University of Cape Town in South Africa. Then started lecturing in the Netherlands economics, but sort of came across the issue that on the internet there's just so much disinformation, inaccurate information, sensationalist information about macroeconomics in particular, because it's just such a huge subject, right? And so I figured, like, hey, maybe what I should do, instead of writing a paper for a year and then spending 2 more years on another paper, maybe what I should do is start making YouTube videos and try to translate what is going on in the global economy based on the research that economists are doing right now, and try to translate that to something that regular people can understand and hopefully enjoy.
You have a recent video called Economist Explains Why Europeans Are Getting Poorer and Happier. Let's focus on the first part first. Poorer. Why are they getting poorer? Who's getting poorer?
So if we look at dollar term GDP, which is the main metric that I think we look at global economies, especially if we compare them internationally, then there's just this clear trend that the US is sort of outgrowing all the rich countries, right? Like Japan is stagnating, Europe is stagnating, the United Kingdom is stagnating. All of these economies are stagnating compared to the United States if we use the dollar term GDP metric, which in many occasions is the right metric to use. At least, if we're talking geopolitics, for example, it's very useful. The dollar is the world currency, right? That's the way to look at it. But then I, found that there was this super strong narrative that Europeans themselves are getting poorer compared to Americans. And in through a certain lens, it's true. But in that video, I make the case that if you look at it from, what regular people are experiencing, then it's not true.
Tell us about the productivity gaps between different countries.
Yeah, so productivity is typically measured as GDP generated per hour worked. And sort of what you see if you look back at productivity, in a couple of decades, you see that there was this giant sort of global acceleration of productivity after the Second World War. And then you saw this slowdown, after in around in the 80s. And then in the mid 90s, it sort of started to accelerate in the United States. Europe was left behind. And then, after the 2007 crisis, everybody sort of had slower productivity, but Europe much slower than the United States, at least, if we again use dollar term GDP, because while they sometimes make a correction for example, purchasing power parity, in these calculations, they tend to only do it once. And therefore, the exchange rate does also play a really big role in how productivity is calculated. But if you use that metric, then the US is leading in productivity ever since the 90s, after Europe, was catching up actually to the US before that. And now European productivity in dollar terms is horrible. It's very flat.
Let's take a look at this graph here. Labor productivity forecast given by the OECD, and it shows the US versus a few European countries, and I believe Israel is on this list as well.
Mhm.
What generally is contributing to a divergence of productivity between some countries in Europe? versus the US versus other places.
Yeah,
Is there a big divergence across Europe, by the way?
absolutely. Yeah. So Western Europe, if you look at Western Europe, France, Germany, they are actually doing fairly well compared to, comparatively to the United States, similarly at least. Eastern Europe is doing really well. So Eastern Europe is catching up to the rest of Western Europe, and Southern Europe is doing horrible. So, on average, they are really pulling Europe down. Yeah. So, but then, if you look at the graph that you showed, there wasn't much to see. I think in that graph, when you look at the
Yeah.
countries, one obvious country that was super high, expected productivity was Ireland. But Ireland is just some country in Europe that you cannot really look at because they have this massive tax evasion, capital flows from the United States, which messes up all their macroeconomic statistics. Um, and beyond that, yeah, that was a prediction. So that's difficult to really say too much about. But if we do want to talk about the future, one thing holding Europe back in the future for sure is that it has worse demographics than the United States, and more research is starting to show, something that also sounds logical, that the older the population will become, the less productive you will become because, older workers tend to be less innovative.
Isn't productivity just a measure of output per hours worked? So you could, in theory, just cut down the hours worked, have the same number of, same measurement of output on
Yeah,
average, and
yeah,
productivity would go up. Um,
absolutely. Yeah.
Generally speaking, just from a economic perspective, what drives productivity or productivity growth?
Yeah, so you're right. Like if you look at labor productivity, which most people tend to do, then you can have actually some strange effects like this. Like some countries may start working less, or for example, famously, I think in Europe at some point, unemployment shot up in the early 90s. And then Europe became much more productive. Why? Because the low productive workers fell out of the workforce. So this is, so on average, Europeans were more productive. But this was obviously a bad thing. So you're right that there are some big problems with labor productivity in particular. Some other problems are that, you can you can you can have more capital, and that makes people more productive. But it's not really something that sort of the people then are doing, and this can also be a temporary boost. And this is why economists tend to look also a lot at something called total factor productivity, where they actually do like a fairly complicated calculation to take into account capital, labor, but also sort of the effects of education and all of that. And if we look at that total factor productivity, this trend that I mentioned, like stagnating productivity worldwide, but especially so in Europe in dollar terms, holds up.
Going back to your video about why Europeans are getting poor, the second half of your title indicates that they're getting happier as well. You talked about how, according to certain quality of life metrics, such as life expectancy, happiness, if we can quantify that, human development index, they remain strong in Europe. So tell
Yeah.
us about the discrepancy here between uh, nominal wealth and perhaps other measurements of uh, social wealth, if you want to call it that.
Yeah, and happier, I think, should be, put in the context of all of this should be put in the context of compared to the United States. And even then, if we look at happiness statistics, yeah, they don't get, very, very much happier, compared to Americans. And Americans, on average, are happier still than Europeans. So that's just a little bit of context that I think is needed here. But I make the case that it's very strange that all of these quality of life indicators are typically very much correlated to GDP. So if European GDP is stagnating to such a large extent compared to that of the United States, why don't we see that in these other metrics? And the case I make in that video is that, if you have these super large blocks, you have Europe, you have the United States, they trade with each other, of course, and with the world. But if you look at sort of, how big imports and exports are compared to, the sizes of these blocks, then that's actually not that big. And therefore, the US dollar maybe is exchange rate is maybe not the right metric if we want to look at, are people poorer or are they richer? And so therefore, economists tend to look often at PPPs or purchasing power parity exchange rates, which focus on, hey, how many goods and services can you buy with your wealth, right? So
Hmm.
how rich are you in terms of goods and services that you can consume? And if we look at that metric, then we see that, the trend is didn't really change. Europeans are poorer in this metric, they can afford less goods and services than Americans. This has always, or has for a very long time been the case, but they are not getting poorer. And that can explain why they are also, not getting super unhappy compared to Americans, that is.
Do you think the formation of the Eurozone and subsequently the common currency between Eurozone members has contributed to rising wealth, or has it held back Europe from catching up with America in some of these metrics?
I think it really matters where in Europe you are. I would argue that in Southern Europe, it's it's been damaging on average, and mainly due to the fact that after the Eurozone crisis happened, you know, very excessive or unproductive austerity, I think, was imposed on a lot of these countries. And with unproductive, I mean, they didn't just cut back excessive spending, they very often cut back on productive spending, like, education or investing in infrastructure. And so I think that the Eurozone in that way has contributed to the stagnation of Southern Europe. However, if we look at Eastern Europe, I think the Eurozone has helped in the sense that Eastern Europe, this is one of the great success stories of the last couple of decades, has really caught up to a large extent to the rest of Europe. And I would argue that the euro had a lot to do with that, even though one of the biggest growers, Poland, still has its own currency. But I recently spoke to the central bank governor of Croatia, which has recently joined the euro. Um, and for them, it was still seen as a very much a value proposition to join the euro. And there are more and more countries still in Eastern Europe that want to join the euro. So probably on average in Eastern Europe, I think the euro has helped.
You interviewed the chief economist of the ECB, Philip Lane. Very interesting talk here. Summarize your findings for us with this interview. What were some of the highlights?
Yeah, so I talked to him about, let's look back at inflation, right? And inflation, I think, has been very controversial everywhere. And the role that central banks played in particular has been very controversial. That is, they are seen as having sort of said, okay, we're seeing a little bit of inflation increase now, but that's purely due to pandemic supply related issues. And so inflation will go back down fairly soon, and we will not have to raise interest rates. Now, of course, we know that inflation kept on rising. Um, and they did need to, or at least they increased interest rates by quite a lot. And now inflation is falling again,
Mhm.
and almost back to target. Um, so, I asked him to reflect on that. And, his position is very much that, yes, we were wrong. But, uh, it would have been, I think it's fair at least to look also at the effect, especially in Europe, of the Ukraine invasion by Russia, which played havoc on the European gas markets. And of course, if gas prices, that is natural gas, um, go up, all prices will start to go up because that sort of feeds into the production process of everything. And so there, I would argue that the initial position by the ECB really was not that bad. And it's also something that, could we ask them to predict the Ukraine invasion? Like that's kind of outside of the domain of an economist, right? But they still reflected on that, saying like, yeah, okay, maybe that's true, but we still should have communicated more clearly sort of the uncertainty that we are facing. And so they are now really trying to get better at communicating the limitations of the central banks because central banks everywhere have for a long time been fairly confident, like, oh no, inflation will be 2%. But then, it was way too low for a little bit, and then of course way too high. And I think this has damaged their credibility, and they're seeing that as well.
The inflation rate in the European Union, I think, as of the latest reading, was 2.2%. This is down considerably from more than 5% just earlier a year ago. Yuri,
Mhm.
what primarily has contributed to the decline of inflation in Europe?
Yeah, so I've also done a couple of videos on sort of what has contributed to the rise and fall of inflation. And, it's very striking if you look at sort of studies that decompose them into their, um, categories like, hey, was this demand driven or was it supply driven? Then we can really see that there's a big difference between Europe and the United States, where in the United States, demand played a much bigger role. But in Europe, it was very much or way more a supplies story with a huge role, of course, for energy. And now, I would argue that the biggest contributors have been that energy prices have just fallen by a lot, and also global supply chain issues have been resolved. And this is also something that central bankers tend to say, like, if you look back at research on the effectiveness of monetary policy, they tend to find it takes roughly 3 years for the effects to really, kick in. It's not been 3 years since we've had this high interest rate. So I would argue that the supply factors relaxing has been the key contributor. Still, I understand why central banks had to raise interest rates because it's their mandate, and if they're seen to do nothing, then we could get that sort of expectations run out of control.
If you look here on my screen, this is from the EC Eurostat website. The inflation rate between different euro area countries varies greatly.
Yeah.
We have Romania here at 5.3%, Lithuania here at basically no inflation, 0.8%. The euro area average, like I said, is 2.2%. How do you design policy for all euro area members that fit? When you have such a divergence, a wide range of inflation rates between members.
Yeah, that's tricky, huh? Um, so the ECB sort of, Philip Lane also sort of recognized this in the interview that I did with him, that this is just a very difficult problem.
Yes.
Um, and so I think if I remember correctly, he also made the case that, some aspects of inflation can be helped at least, or like somewhat maintained by other policies. Like, for example, if a government targets supply, right? Or energy inflation, for example, could have been, some countries just let it rip, and others really subsidized energy for a little bit, and at least until after the shock disappeared.
Yeah.
And that way, I think, if they coordinate that correctly, you can have one interest rate for such a large area. But yeah, still, of course, this is always a dilemma.
Okay, so here I've noticed that the countries closest to the euro area average are the largest countries. So Germany, Portugal, France, um, Spain. Is this just an arithmetic average here that we're talking about because the bigger countries contribute to a larger percentage of GDP, or is this a
Mhm.
result of certain policy measures that it just so happens that the larger countries have moved in tandem, whereas the countries on the periphery have deviated from this policy?
Yeah, that's an interesting question. I cannot really tell you because I'd have to,
Yeah.
because the thing is, like, energy played such a huge role in inflation, and I do know, for example, that some of the Baltic states had huge energy inflation, around 2022, 2023. So it could also be that here, the graph that you just showed, they had ultra low inflation. It could be an effect because they had much higher inflation previously, and now they had much lower inflation. Um, Essentially, I would have to know all of the energy policies of in these individual countries to properly answer that question, I think.
If we were to look at what is ahead for the ECB, do you think they'll continue to be dovish in their monetary policy?
They've signaled, like, there's two parts, why. first, sort of, they've signaled themselves already a little bit like, hey, maybe we're getting more dovish and maybe you could expect another rate cut. And then, of course, the metric that they are looking at, inflation, what is it doing? It's fallen faster than expected. The Eurozone economy is not looking great. And the idea is that, if that economy is faltering, there will be less inflation. So that's sort of the, European perspective. And then, of course, the US dollar is still extremely important. And the Fed lowered interest rates by half a percentage point, if I remember correctly, at least, and that was more than expected. And so, from an international perspective, there's now also more room to lower interest rates.
Well, the ECB only has one mandate, which is price stability, unlike the Federal Reserve, which has price stability and full employment. And
Yeah.
like I said earlier, euro area inflation is already at 2.2%, which is very close to their 2% target. So why do they need to cut rates more?
So they are not looking at inflation today. They are looking at where they believe inflation will be in a year or more. Because interest rates take so long to have an effect, right? And, if inflation falls more today, then I think they expect inflation they update their inflation forecasts as well. And, if I understand correctly, they expect inflation to fall quite a bit more in the future. And therefore, so in short, they're not reacting to today's inflation. They're reacting to the expectation of inflation in the future. And now there are more and more signs one amongst them is poor economic performance, that inflation will soon dip below that target.
Looking over to the US now, what are some of the biggest challenges that you believe the US economy faces today?
So one thing that I'm quite worried about is that inequality seems to be rising again. Like this is, of course, one of the big trends that sort of dominated talk about the American economy over the last, 10 years.
Mhm.
And then right after the pandemic, you saw these really hopeful signs that the inequality was decreasing. Credit has been given to the stimulus checks for that. But now there again seems to be quite a few signs that inequality is increasing again. Potentially increasing political polarization more. So that is something that I'm definitely worried about for the U.S. economy.
The US has the advantage of having shale oil production, which is to say they're able to produce most of their energy needs on their own now. And in fact, the US, I believe, is the world's largest oil producer, not counting OPEC combined. However, Europe doesn't have that luxury. It's still reliant on foreign exports of oil, particularly Russia, by the way. So, how do you think energy independence can be, I guess, improved or addressed for Europeans at least going forward?
Yeah. So one of the trends that I'm tracking right now for an upcoming video is how the cost of solar panels, wind turbines, and batteries have fallen tremendously to such an extent that for many new power plants, these are now cheaper than fossil fuel power plants. Of course, a lot of this is driven by a gigantic investment in China in solar capacity, right? Like some even call it overcapacity. And of course, you now have this global sort of backlash, like, hey, maybe we should put tariffs on Chinese products like solar panels. But I think for Europe, there is an argument like maybe we should not do that. Maybe we should use these cheap solar panels that are subsidized by the Chinese taxpayer to actually lower our dependence on big oil producing countries, such as those in the Middle East or like Russia.
Looking ahead now, which economies around the world do you see the most growth going forward?
I would look at two factors in particular. One is demographics. And if you look at demographics, then India is actually really promising, even though their population is starting to decline. Um, and even though I think the Indian institutions are really not as good as the Chinese ones, when they had their miracles. I'm not saying India will have a growth miracle like China at all, but I do think that, for the upcoming years, they have a very favorable position because their working age population compared to the dependent population, that is the elderly and children, because the Indians are having less children. And for that reason, they are now having, for the upcoming 10, 20 years or something like that, a so-called demographic dividend, meaning that sort of, workers have more time to work in India, which could be very favorable for them, from a competition perspective. And so I think India has really good prospects. And then if we continue looking at demographics, Africa will start getting really good prospects, like African countries in general, around 2050. So, okay, maybe that's a little bit far out still. And then if we look at another big factor I'm tracking, which is deglobalization, or what the IMF calls fragmentation, that is like, hey, we're seeing these blocks emerge, Russia and China versus, Western countries, Japan, Korea. There, I think are some really big chances for so-called connector economies that are able to potentially profit from decreased trade between these countries, like, for example, Vietnam, Mexico, and to a certain extent also some Eastern European countries that may profit from investment, leaving China, or factories leaving China and going to these countries.
The global fertility rate is declining in most countries, except for some sub-Saharan African countries and as well as some Southeast Asian countries. However, in most developed countries, the fertility rate is now below 2, which is to say that the population of most of these countries will decline. And so, how do we drive growth in a declining population era?
That's very difficult, huh? Like, yeah, theoretically, it would be to become more productive, right? So, do more with fewer people. And of course, there are many people who say, okay, AI can really help a lot in this. I think you could also argue that if solar continues to rise as quickly, at some point during the day and in some geographic locations, we might actually get energy abundance, meaning that all sorts of technologies that have never been, possible are at that point possible. So I think there are definitely some really, hopeful trends that make it so that we can become way more productive. Um, but of course, we'll have to see if we can get so much more productive, productive faster than we get old, and that will definitely be challenging.
Why are you bullish on solar, the prospect of solar energy? I mean, it's a trend that's been developing and solar panels are getting cheaper. However, the criticism is that it's still not a reliable baseload energy source. Can you address that?
So two reasons. First is that if we look at global solar power capacity, we see that it's now going exponential. Now, a trend that is going exponential, is potentially difficult to slow down. And I think you can also rationalize why it is exponential, two reasons. Falling costs. So solar panels are just now so cheap that yes, you have all of these downsides, but you can potentially just build more. And we are to a lesser extent, but still seeing the same development with batteries, that they are also getting cheaper and cheaper and cheaper. And of course, the combination of batteries and solar is sort of the magic combination that we want. And if both of these, are cheap already, cheaper than ever, and getting cheaper and cheaper, how can you stop a trend like that, right?
Okay, China is the world's largest developer or manufacturer of solar panels. Do you see this trend continuing?
Yes, at the moment, for sure. I mean, they are, of course, subsidizing this stuff, or at least, maybe I should say, allegedly subsidizing solar to a very large extent. And I don't see them stopping that because Xi has sort of expressed his wish for China to become a manufacturing superpower even more than it already is. So I don't see that trend stopping. And then, they have these huge advantages when it comes to economies of scale already. And sort of if you look at if you look at solar companies, they are failing on a quite a large scale. And yet investment in China continues. Like how can a company in Europe or the US compete with that on a global scale? Yeah, okay, in the US, solar companies compete because that market is, more and more blocked off to Chinese competition. But these US producers, if they cannot compete on the global stage, how will they become more dominant than Chinese producers? I don't see it at the moment.
Well, the trade wars between the US and China, tariffs have intensified under the Biden administration. Biden has doubled down on Trump's tariffs, basically. So the question remains as to what will happen to the future of Chinese US relations from a trade perspective. What's your outlook?
As with sort of many macro trends, I think they are sort of a slow moving process. And so, a trend like this, I would expect to continue for a bit. Uh, Especially if you consider that, the Chinese government attitude is, like I mentioned, not like we need more consumption in our economy as most Western economists are recommending, but no, it's like we're doubling down on producing more and more. So from that side, I don't really see a change. And then, how else can, many Western countries at some point react, given sort of especially given the experience that they've had with how smart it was for Europe to rely on Russia. So, if I think if you look at the incentives on both sides and the intentions on both sides, I don't see this trend changing anytime soon. It might sort of peter out or become somewhat more stable, but I don't see it changing.
Thank you very much, Joeri. I appreciate your thoughts. Tell us what you're working on now on your channel, what we can look forward to coming up.
Yeah, so I think you've already seen sort of my enthusiasm about solar. So I'm working on a video about sort of the economics that are now powering this exponential growth in solar first. And then, yeah, after that, I'm looking at the effects of basic income on development aid, basically. Yeah, I'm also looking at a video about the effects of demographics, something that we talked about here quite extensively as well, right? On the global economy. Like, hey, which regions will have this demographic dividend? When will that change? Africa coming into its own after 2050. Yeah, that's a third video that's in the works.
Thanks very much. We'll put the links down below for Yuri's channel and his social media. So check him out there. Appreciate your time.
Thank you for speculating with me a little bit about the future of the global economy, David. It was a
Very
lot of
fun.
fun.
Yeah, indeed. We'll have you back. Thank you very much for watching, and don't forget to like and subscribe.